Ajay, so nice to have you back on ET Now. Thank you for joining us.
Thank you, Nikunj, and a very good
Haven't
morning
seen you in a while in Mumbai. Are we missing each other, or you've not come to Mumbai?
We are in 180 cities, so I must tell you, I have to distribute as much as I can to travel outside Mumbai too.
Well, look
But
forward
thank you, Nikunj.
look forward to meet you in person very soon. Uh, there is early evidence which is getting endorsed, what you've been flagging off, that the rural economy is making a comeback. Now, from two-wheeler sales to FMCG sales, even HFCs or housing loan companies are indicating and acknowledging the same, that the worst is behind in terms of rural economy and the cycle has reversed. If the rural cycle indeed has reversed, and since you are present in 180 cities, low income categories, what does that mean for you?
So, Nikunj, I think all the negatives have been taken away. The question starts from monsoon, what happens, and areas like that, elections. I think we are settled. The second key fact, really, if you even see the budget, I think the budget is meant to see there is balanced growth across India, and the money cycle has already started. Thirdly, I must tell you that in our vendor finance business and supply chain business, we can see terrific orders both for medium enterprises and small enterprises, because the value chain of defense actually goes all the way down, for an example, or so for solar, so for EVs. And we can see a very strong performance in manufacturing now in the what I would classify as the medium enterprise also. And all these three things, if you add up, and then you would think, how should the Bharat do, so to say, as some of the folks use as a name, it should do very well. What it means for us, two things really. For Jana Bank, we are focused on growing our business on the secured side, whether it's housing, is business loans backed by property, two-wheelers, etc. We can see robust growth. So no change there. We are now seeing very good growth in our MSME business, and largely led with what we think is a very good order flow at the medium enterprise.
Yeah, point taken. But the fact that you are saying about, increasing the secure exposure and going slow in the unsecured, even in Q1, we had seen that the BC book witnessed some stress, and that's why you deliberately started slowing the growth there. What's the, situation on the ground right now? What kind of growth rates should we expect in that side of the business?
So, we have been not, defocusing away from unsecured since 2018. And the stress in our BC book shows that it was the right strategy. BCs are very localized, strong players, so they can recover and manage customer relationship connectivity much better. And which is exactly why we went with the BC opportunity. We are very convinced that our BCs will do a good job in the next 2 quarters. They will fix it and will come back. But see, again, for us, if you take our own unsecured book, it has done very well. And the reason it has done very well, because we grew slowly. We were very clear on what credit we were giving, what leverage we were giving. And touchwood, I must say that that has held us in very good stead. So I think the rule that you grow unsecured too fast will get you into some kind of a tight spot absolutely holds true. And for us, strategically, we've never focused on unsecured. 6 years, 6.5 years, I would say now, since the bank began. And that's been the right answer for us, and we'll continue to do so.
Do you think there is a bit of a challenge in terms of how liquidity for the entire NBFC stroke MFI segment is moving? One side we are talking about the regulatory oversight increasing. On the other side, we are looking at credit, which is slowing down in these categories.
Yeah. So, Nikunj, my bias, and I must tell you that we do lend to a few NBFCs ourselves, and we have a lot of our friends and colleagues who work there. Two things. One is, they will certainly be the good players, will never have a chance of not getting money. I do think there is a reason to step back on two things. One is what kind of risk are you putting on your books? And second, what is your pricing to your customers? I think the regulator has flagged both of them. And I think it's important that all of us just step back and look at it. And once we sort that out, we are good. Remember, the worst loans are made in the best of times. So I think if all of us get over comfortable now, it will all be a nice story, but maybe a year or two down the line, we'll not be so happy with ourselves. So I think there is a bit of a over anxiousness saying, why are we, when everything is so going so well, why do we have to worry about a few things? And I think in good times only we should worry about those things, because best thing is to sort it out while we are, we have the capital, we have good numbers, gross NPA, net NPAs are low. Let's fix a few things, and I think it's all in good order. I do think that people, and I think in the markets also, I think the general thing is like a small worry over worries everyone. Maybe it's been a bit too good for too long. The other thing I would say, and I was hearing your earlier guest, listen, economy is doing well. Everybody thinks reality will do well, and banks won't do well. That is very unlikely. You can't have the economy and sectors which really need a lot of credit do extremely well, and banks won't do well. I mean, it doesn't add up in my basic mathematics that I would have done for how you would look at performances. So I think it's a bit of too good for a bit too long, and small things become big worries. But actually, if you step back, you will figure out it's all noise. I think we are on a fabulous trajectory as a country. We just have to keep our heads down and execute. And we'd rather be the solution than the problem.
I also wanted to get a sense from you, Mr. Kanwal, about the net NPA ratio. It came up around 0.99, close to 1%, and that's an important mark given the entire process that you are looking at to convert into the universal bank. Are you confident that you'll be able to hold on to the NNPAs just around that level or even lower?
So I think two things, and very important. See, 0.99 is not certainly for a bank which does a lot of lending in the informal small ticket. And my customers are certainly, uh, from the balance sheet perspective, weaker. So having a net NPA, gross NPA is pretty much business as usual for us. First quarter, I think combination of two, three things. We had a heat wave which did impact people. Certainly collectors going out to collect. Tough job for them. Second, I think election does give some amount of cautiousness at our end of how much you really want to pursue the strategies that you would do in normal times, and rightly so. Also, a lot of the machinery across, whether it's the DRTs, it's the tehsildars, it's the people who need to accompany you for other collection activities, that's completely slows down. Third, as you know, banking the first quarter for reasons which we still haven't figured out tends to be a bit slower. So nothing alarming from our end. I think it is pretty much we have got to work harder in the quarter two to make sure quarter one slight change will get sorted out. But we are very confident about it. But see, our confidence is not just us, which is why I think it's good that we began with Nikunj on the economy. We are certainly a part of the system. If the system does well, we'll certainly do well. From our perspective, we are doing our best.
Okay. Ajay, in next 12 to 18 months, on a scale of 1 to 10, what are the chances that I would soon be changing, I would soon be saying that Jana Small Finance Bank has become a Jana Universal Bank?
Nikunj, I would, next time you're speaking to the regulators, I think you should ask. It's in their hands. All I can tell you is that,
Have you met all the necessary criteria which is as per the regulatory requirement? Have you approached the regulator? See, ultimately the decision would be with the regulator. I completely respect that. But in terms of our viewers who want to understand that to qualify as a universal bank, you need to follow a template, you need to follow a criteria, and then you would have to approach regulator with an application or with an intent or an interest. Have you done that?
so on criteria, Nikunj, we meet all criteria except one, which is net NP has to be less than 1% for 2 years in a row. So last year we met the norm. We were at 0.5. This year we are doing our best to meet the norm. We are confident we'll meet it. and then we'll approach the regulator. As far as the regulator is concerned, Nikunj, there is a constant conversation all the time. So they know our interest. We have said it. We engage them. They advise us. So yes, we are doing our best. Like I said, from our perspective, the best thing is there is now a very clear path. It allows us to make an application. We'll get the application ready. We'll do our best to make sure that we appeal to the regulator as the right candidate to get the universal bank license, and we'll certainly make sure that anything that is required at our end, we will sort it out.
Become a universal bank, what changes for you in terms of cost of income, in terms of the fee-based income which you can generate, in terms of the CASA you can create?
So, Nikunj, what will change a lot to my mind? I mean, there are parameters will change, priority sector lending, etc. But, that doesn't change my business model. So I don't think so my priority sector will come down even if I become a universal bank, because I do serve Middle India, and Middle India tends to have a very large portion of priority sector lending, affordable housing, for example, So I don't think so on many parameters. So capital adequacy can get lower, but fundamentally, I'm not trying to, reduce my capital adequacy. I rather have my capital adequacy at a very strong level. So I think, yes, there will be changes which will be okay. You could, so 50% of your loan book has to be less than 25 lakhs. It will change if you become a universal bank. But that doesn't, I don't think so I need it. I still want to do a lot of retail and small and medium enterprise. I wouldn't like to, even if I have the option to change it, I don't need to change it. I think what will change a lot is there is a liability challenge. For small finance banks, we tend to pay a premium. Because the moment people see the word small finance, they think it's a differentiated bank. Obviously, it's not at the same level as they would. Why would you put somebody write small finance in front of a bank's name? And so they tend to expect a premium. And we have always, all banks have some premium over their universal peers. I think that will certainly help, because when the word small finance goes away, I think it'll help us scale up CASA, because people sitting on the boundaries, people still unsure, people still checking, it just makes a big difference. Right. For example, you look at our own conversation today, we did have to bring microfinance in because someone might said, small finance is microfinance, though it is not our biggest business, right? And, 2 years out, it will be even smaller. But somehow that name attracts that thinking. So sometimes it is good to make sure that you don't have it in the name. And I do think it'll help us on the liability cost. It'll help us in the liability momentum. Employees will be a lot more happier. And certainly, I think it'll give a lot more comfort to all stakeholders.
Right, Mr. Kanwal, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Bye-bye.
If you like this video, then like, share and subscribe to ET Now.